Good afternoon, everybody. Welcome back to the Opportunistic Trader. It is just after 1 on November 15th, and we're joined now by Tom McEntee. Tom's been joining us to talk about equities, options, great risk-reward opportunities that he finds, especially looking right now at earnings or just, with big catalysts coming up, different ways to structure trades that make a lot of sense for great risk-reward opportunities. Tom, how's it going?
Very good, Mike. How you making out?
Making out. It's been busy. One day it's equities, one day it's energy. One day's there's a lot of different things going on. So
Well, like we've said before in some of these chats. I mean, there's definitely a level of randomness we haven't seen in a while, right? I mean, crude making an incredible move to
crude,
the
12
downside.
straight down days. It's actually going to be pretty interesting to hear the stories of who got crushed this month, who might have had that spread that Mark Fisher was talking about yesterday, the long crude, short nat gas, and who got blown out at bad levels on that. But we had 12 straight down days in crude. We moved from like 68 to 55 ish in a straight down move.
Well, I wonder where this guy put that spread on. I mean, this is a. I mean, I was speaking with you and Larry, I guess Tuesday, and we were at or near the year lows, right? I think December we traded down. Last December we traded somewhere at or near 56, 55, something like that. So where they put the spread on? Where were they getting long
Well,
crude
well,
at?
Mark was talking about. Well, I mean, crude's been going straight up for. It's even last year and this year. Mark was talking about a really longer term trade structure that people have had on for number of quarters of long crude, short nat gas, and that's one trade. And then the other one, just look at at momentum crude. Specs were long. They weren't as long, but they were still long.
Yeah, I agree. I mean, that's usually classic how you get a disaster like this. Everyone running into the same thing at the same time.
But it's
No.
also interesting if you take a look at February, we saw a huge move in VIX, a big move in the S&P 500. We saw another move in S&P recently, but it wasn't like February, the move that we've seen in the past 60 days. But then this move in oil and natural gas, those have been explosive moves similar to, fashion that we saw of February. And so I don't know if it's systems that are involved in this, maybe adding to the volatility, but definitely seen some significant moves where people have been hurt big time.
Yeah, no, well, yeah, and they seem to be going to extremes. There's no doubt about that. And they're going to go to the greatest pain. I guess crude was the greatest. Look, I mean, I would have. Geez, I did a trade as high as 75 a month or so ago. I mean, if I was playing it, I would have been involved.
Hmm.
Trying to get along somewhere, anywhere below 70, I guess, for a trade. Sure, so I would have
Yeah.
been in
So
a
I
world of.
know on the equity side, we wanted to start out talking about Nvidia. They got earnings after the bell, and we're going to talk about a few other things. I know you mentioned a trade in the chat on Nvidia. Take us through what you're looking at, what sort of structures
Yeah,
that might
yeah,
be out
sure,
there.
absolutely. Nvidia. The only reason I know this stock is because a friend of mine in the gym. I'm there taking a shower. Well, I don't want to get too graphic. Usually in the locker room at around 7 a.m. We're changing. We're getting dressed. So he's, yeah, have you seen Nvidia? This has been going on for a year, and I think he mentioned it to me when the stock was, I don't even know, 120. This is going to be a year and a half, 2 years ago, and then all of a sudden, I just, yeah, would you see Nvidia? You see Nvidia? And okay, get to 290. Traded as low as 176, I believe, a couple days ago. Am I correct there? Let me get a chart up. Hold on one sec.
I'll bring it up.
As a, as I maneuver
Yeah, we
deftly.
traded down to, yes, let's call it 176, give or take. I don't have the exact low, but yeah.
Yeah.
And then we
Okay. So I got that.
rebounded,
I'm
and then
looking at
like 3 days
176.
later, we traded 225. 4 days later,
Right. So
crazy.
you kind of read my mind there, dude. Because what I'm thinking is that I'm looking at this 176, 290, 290 being the high from when was that high? Um,
Yeah, I'm really interested to see these options because this thing is so volatile. If they were to miss this thing, be bad news.
oh yeah, absolutely, no question about it. And that kind of price for that, I guess.
Well, I was actually just about to pull up myself here. One day to go. I'm looking at the $200 straddle is $19 basically.
Yeah, that's interesting. Good. So see, Mike, now you're contributing, and you're definitely an aspect. This is where I'm going, bro. You know the way I'm looking at things, and I guess we look at things the same way. Okay, the average extreme one-day move for the last 8 quarters has been about 10.5%, but I would temper that with the fact that there have been 2 outliers within that sample size. There's been an 18 and a 31. This is one day because you only have tomorrow, right? So it's obviously
Right.
more. I don't know if this is a term, but more binary. I sound like some idiot on TV. More binary than your standard kind of thing, right? It's one day, probably the open, and a couple hours after that. But it's been 10.5%, but it's been skewed by an 18 and a 31. 2 times in the last 8 quarters. Interestingly enough, they were 6 and 8 quarters ago, respectively. Anyway, what's I think more significant, or perhaps more significant, let me walk that back a little. Perhaps more significant is that 6 of the previous 8 quarters, the one-day move has been less than or equal to 9%. And you look here, they're looking for. I think they were looking for 10. Is that what you said, Mike?
Yeah, I mean, just doing the math, it looks like it's like 9.5% or so. Let's call it 10. Just yeah, and then so 10%, which with this volatility we're seeing in the market, and just looking at the chart where it's come and gone, 10 does not seem high. I mean, we just did like you pointed out, we traded 175, then 3 days later we were trading 225. So that was a 20% move, non-earnings related. So, we were just.
No, you're absolutely right. Point taken. But I think we also got to be cognizant of the fact that vol's a mean reverting instrument,
and I guess also it's one day as well.
And it's one day. So what I want to look at, I mean, so it's 20. I mean, and that is, what am I saying? It's 940. 18, about 9%. So it's kind of in line with where I think the max move is going to be. I'm going to try to leverage that 9%. And say that's as high as it. I mean, at some points the volatility gets tired. You follow what I'm saying? I mean, they move around so much, people get tired of following the bouncing ball.
Yeah.
Just kind of, look. I was waiting to buy, S&P vol at 14, and I didn't really get it. I really didn't get the what I wanted on, so I was wrong there. But anyway, okay, neither here nor there. I want to leverage that 9% thing. I want to look at the midpoint of that move, that 176.290 is 233, right? That's 114.57, 233. I'm looking at that, and I'm also looking at a gap. Do you have the chart up there?
I do.
Okay, you see a gap. I believe the low is 227 spot something on 1022.
I'm going to take their screen. They're going to be seeing my screen right now because that has NVIDIA's on the right-hand side over here. So which gap are you looking at here?
I'm looking October 22 to October 23.
Yeah.
You see a gap between like roughly 224 and 227?
Yeah.
That's what I'm kind of zeroing in on. Now, what I want to zero in on is I think that, can it get that? We've talked about this, and I think we've been proven right. I mean, there's so much randomness here. I think anything can happen. I think that I want to play the upside because the market's so heavily skewed to the downside in here right now. So everyone can't be right. We know that, right? The game doesn't work that way. So I want to look up. I want to sell next week's. Let me click these on here. Move 23. Do you see that? Do you see those? Okay, no. Should I widen this thing out? How's that? Does that look better?
That's great. Yeah.
Okay, cool. I want to sell these. I already did. I think I'm underwater on this thing. So I want to sell these NOV 225s that expire next week. Now, what I'm trying to do there is avail myself of the fact that it's a holiday shortened week.
That's true, also. Yeah.
So I want to be aware of that. And look, I'm aware of it because I'm painfully aware of it because I've been on the wrong side of it a number of times. So that's it. I want to sell these 225s, and I want to go out a week to November 30 and buy the 230s. Now, that spread, I paid 17 cents. It's in the chat. Where is it currently? It's right around there. The midpoint's right around 17 cents. That's where I have it.
So hang on, take me through here. So the 225 calls expiring a week from tomorrow are right now 235, roughly 235 at 250.
Correct.
And then where are the 230 calls expiring about 2 weeks from now?
The 230 calls are midpoint is about $2.65. Okay, 255 bid at 272.
So you're looking to pay a small amount. What are you looking to pay here? Like a quarter or something like that?
I already did. I already bought it. I paid 17 cents. I bought it at about 11 o'clock. You can see in the chat. It's in the op trade blotter. I paid 17 cents. What I'm doing there is if you follow me, I'm running my cursor over the volatility in the 230 calls. Do you
Right.
see that?
Yeah.
68, right? You see the
Yes.
delta? You see the delta of these calls?
Yes.
About an 8, they're 18.
Yes.
I'm not going third decimal, okay, Mike? Let's not go there. So 68 vol, 18 delta. The 225s are 81 vol, 18, maybe a 19 delta. So to me, it's delta neutral, because when the vol comes out, if the vol was normalized, if being the middle word in life, apocalypse now, 1979. This is a delta neutral spread.
So here's a question. Can you see if tomorrow we're trading at 220, let's say it's a good number, we're trading at 220 tomorrow, what happens to that spread?
Done. I will tell you in a sec. I have the exact number here. Okay, so now you got to realize, now tomorrow, the next week's options, we're trading at 220 middle of the day. Okay, we'll call it that way.
Right.
And you got now all you got now are 4 days left, right? You got Monday, Tuesday, Wednesday, Friday. Correcto for the NOV 23 options, all right, which are currently trading 88 vol. I'll knock the vol down halfway I'll knock it down to the midpoint of the implied vol move recently from the nadir to the tip, 27 to 76. So I'll knock volatility down to about 52 in those options.
Okay.
I know they're currently trading 81. I want to say it's 52 vol. That option with the stock trading at 220. 4 days to go, so it'd be close enough to COB tomorrow. $2.75, $2.75.
So your calls, so the 225 calls go up a quarter, like very small, to 275. You're saying, and
right.
Then what happens to our 2 week away 230 calls?
Okay. I will knock vol down to 45 in there.
Okay.
Okay. So I'm still 6 clicks under. It's 13 clicks right now over. It's not going to be that wide, but like we discussed, I'd rather look at the worst case scenario than the best case and then deal with it. At a 45 vol stock 220, I have 11 days, right? I mean, they got the 4 days. I got 7 more days than the other ones do. I got that thing worth $3.16. So the spread's worth 40 cents. I would posit that it'd be worth a little bit more than that. So right there, if it's worth 40, I'm getting 23. I'm getting 1.35x on something like that, and it would only get better if we played around between 215 and 230 over the following week. I want to leverage that gap fill. I want to leverage that midpoint, and I want to leverage this volatility. So what I'm doing here is, we spoke about this, Mike, and I'm glad you brought it up before we got on the air. We talked about Tuesday about the volatility of a time spread, and I think if anyone's out there and wants to glean perhaps a better understanding in the workings of a madman, this would be it. What you want to do is normalize. Okay, here, let's do it this way. I sold this option at 80 vol. We'll keep it simple. I sold this volatility. That's 80 volatility, the one I sold, and the one I bought is 68 vol. Okay, so I paid 17 cents. Okay, buying a 68 vol option and selling an 80 vol option. Okay, so far, Mike?
Yep.
Okay, now what we want to do is we want to make it apples to apples. So we want to normalize the volatility of both of these. Okay, so now if I were to buy the spread at 80 volatility, I would have to move this volatility, the November 30s that I bought, up 12 clicks. 68 to 80 is 12, and multiply it by the Vega. Vega is rate of that's for every point in volatility, up or down. That's what I would make or lose. So if volatility went up a point, I'd make 12 cents. If it went down a point on these things, I'd lose 12 cents.
And now I remember last week or 2 weeks ago, you made the comment that you get into these trades as a spread and you get out of them as a spread.
Absolutely. Now, I didn't do that with Apple this week because I got lucky, because the 92.5s come off the board, and then I rolled. I had the 190s. I went for 15 cents by covering the 92s. I rolled the dice, and I got very lucky. I mean, I bought stock at 91.80 and then 89 something and 87 last night. So I own that straddle. Boom, boom, boom. Yes, but by and large, look, if I see this thing trading 40 cents tomorrow, I'll probably kick it out. But I might wait a day to Monday just to take advantage of weekend decay, because part of my thesis here is that I am going to get geometric might be too strong of a word to use, but I'm going to get certainly much more geometric than linear decay in those short options, in those Thanksgiving options, okay? Because people around the Thanksgiving table will say, pass the gravy, and hopefully the NVIDIA Nove 225 calls.
Here's a question for you. If the numbers come out bad today and we're trading a 180 tomorrow, will your 230 calls be worth even a penny or 10 cents or 5 cents tomorrow?
I'm just trying. If we trade 180, I mean, where do I see volatility? I mean, it's certainly not going to go down too much. Maybe it's trading 60. Maybe it's trading 60. I've got.
Because I'm just trying to think of, if you're getting in the spread for 17 cents, even if it goes horribly, let's say the market goes down, if you could even get out of these calls for 5 cents, then that lowers your cost as well. You do have to, then you're naked the 220.
No, I think, look, I would have these calls worth 15 cents, knock a vol down to about a 60. And that's 8 clicks lower than it is here. I don't know how much, so it's still, I'd probably break even down here, down below, down to 180 because the volatility wouldn't come in that much. Because I'm long Vega, right? I'm long the November 30s. I'm short the November 23rd. So I'm long duration. I'm long Vega. So the Vega, if the volatility didn't collapse that much, I'd be okay because it's not good because the 220s obviously are fighting the clock, tickety tock, right?
Right.
NFL team, 30 seconds to go, no timeouts, got to go 80 yards, right? So I mean, they're fighting geometric decay. So it's a big headwind.
But that's what I'm saying. Theoretically, if we go down to 180 and those are worth 15 cents, you could sell your calls and just continue to keep your short calls potentially.
Yeah, exactly. But I mean, the short calls are going to be 2 and 3 cents. I mean, you know what? If the thing goes down to 180, obviously I'm wrong on a directional bet. And if I can scratch the trade, I'll take it off. I don't care. That's on to the next. I never even traded this thing before, so I just look at it. I just know the earnings is some type of an event or an event I want to play. So yeah, if I got 180, then the spread's probably up and down a couple pennies. I'm probably gone. But I think it's got a good chance to trade higher. Look, to me, I'm worried about like what I lose on the upside. That's what I'm thinking about. If the thing goes, it's such a nominal amount. On the downside, it's 17 cents. I'm not really concerned about that. I just want to manage. That's why I structure these things. I want to have some type of guidepost what I'm shooting against on the upside. Like the same thing, like you see me in the chat, I put that Apple next week. That's another thing we should talk about. But let's finish up with the video. We'll go to that Apple spread that I
did. One other question. What's the worst case scenario on the upside in this sort of structure?
All right. The worst case is I'm going to lose the difference between the two strikes. 225, 230. That would be $5. Okay, so I lose $5.17. What would I need in the stock for that to happen? Well, I'll ask you this question: where would you value if the stock was trading 250 next week? It's expiration. The Nove, whatever the hell they are, the Nove 225s are worth $25 intrinsically. Okay, they're coming off the board because that's what they are. They're worth 20. The question is, what are the 230 puts with a week to go? I'm long the 230 calls, right? Essentially, now what I have on is I'm long the 230 calls. I'm short the 225. The 225s are now stock, correct?
Right. Yeah.
Okay, so now I'm long that synthetic put. I'll say in the chat, we talk about this all the time, Mike. Long call, short stock equals long put. So I'm long that 230 call. I'm short the stock at 250. What is the 230 put worth with a week to go with the stock trading 250? Okay, so I would say it's obviously worth something. Was it worth 30 cents? With a week to go, I would say I'll knock volatility down to 40 because obviously it'll be smooth ships ahead. Yeah, the put's worth about 20 cents. So even there, I'm still okay. So I got a lot of room here. Okay, and I'm knocking vol down to 40. That 230 put with 5 days to go is worth about 16, 17 cents. Exactly what I paid for it. So my nightmare scenario was a stock printing 280. I got a lot of room here. I got room 180 to 250, I think, in the next week. Now, that's me with these volatility assumptions, and I think they're kind of aggressively structured against me, which is way I like to live. So yeah, so I got plenty of room there. So you see that calls. The put's going to be worth 16 cents, but I'm out. You see, I'm still at the $5. Wait, I don't have 5. That's worth 16 cents. That's worth 20, and that's worth 25. Yeah, my break even is probably going to be somewhere around 240 because that call is going to be worth 11. 235. Yeah, I got room at the 235. So 235, I'm good up to 235 because that put will still be worth something. Like I remember from 180 to 235. That's why I'm levered. That's what I'm looking at. I'm looking at what's the worst case scenario. 235 is that midpoint. If it gets there, it gets there. I don't think it's going that far. That's why I'm shooting against 227. I'm thinking it's come a decent way so far, and I'm willing to play. I'm willing to roll the dice here, and we'll see what happens the following week. Because I'm just banking on, geometric decay next week. That's the kind of the way I'm playing. I think this thing, 17 cents. I think I got a high probability of getting 2 or 3x on this thing. If my directional thesis is correct, I think I can get 2 or 3x on this trade. It makes sense from a math standpoint. What I'm doing is, we talked about the time value of that spread. When I normalize volatility, if I move that up and move the Vega up, I wind up buying this spread at like a 33 volatility. Okay. Now I know 1 week out, the lowest this volatility has been in this stock has been 27 since this corrective move in the overall market started. So I'm very comfortable. I say that now, obviously it could be cavalier, but I'm comfortable owning 33 vol in this thing next week when the lowest has been is 27. I really don't see it going much below 50. That said, I'll probably trade 45, but I got so much room. That's why it works, because the math on the volatility works. And then I think you got the technicals working for you. That's why I try and do these things. I think the stuff next week, if you're getting a chance to sell it, like we talk about this all the time. Nobody wants to buy it when it's 9 or 10 vol. And nobody wants to, this is SPX I'm talking, and nobody wants to sell it when it's 20. That's the perverse nature of the game. Doesn't make any sense, but that's the way the game is played. Everybody wants to buy momentum. Nobody wants to sell it. Nobody wants to buy weakness. Everybody wants to buy strength. I mean, that's just an observation of doing 30 years of this stuff. Look, I've been wrong plenty of times buying it. But I think here, I like to think I'm fairly adept enough to be able to structure these things and sell them at decent prices, or structure them in such a fashion that I got a high probability of success. And
just to break in, I don't necessarily see any news, but S&P just rallied about $25 in the past 20 minutes. I don't have the news in front of me right here, but
I was talking to XDM, whoever XDM is. They kind of look like I thought they'd have stopped here, so I'm freaking wrong. But it looked like this morning, like if they couldn't knock them down anymore, I'd be worried about the upside. But I think the tell, Mike, is going to be in stocks like Procter and Johnson & Johnson. I think a lot of money's hiding in these things. They're really stretched. I mean, these are, low vol. Are they consumer? They're not cyclical stocks, but they're consumer stocks, especially Procter and stuff like that. This thing's up, had an enormous move in the last 2 or 3 months, up roughly about 12 and a half. I think it was 82 or 83 when I was trading.
I think I'm seeing some of the news here. Lighthizer is talking tariffs, and he says that some of the industry executives, the next tranche of tariffs are already on hold. So that's something.
Tariffs?
Well, just talking about the next group of tariffs to China are apparently on hold is the headline of the hour that has the markets higher.
You know what? I've got one.
And Lighthizer in the side of the office, I believe, more on the hawkish side. That's been more, tough on China. I could be off on that, but I think that's the case. And so for him to say that, that the next tranche is potentially on hold, I guess that's the positive side that the market.
Yeah, look, hey, news finds the market. We all know that.
It's the sort of thing. They're having G20 coming up. We're under 2 weeks away from that. And, I was just talking with Angie about it before, I'd be careful with all these headlines, even after they're released with the G20, what's actually happening.
No, I agree with you. Because, a lot of the headlines have been freaking false or wrong, whatever you want to call them. So I just want to trade the move. If they give you a chance to trade it. That's why in a way, you want the freaking, everybody here wants the volatility. So if they give it to you, just widen out you can widen out your bid and your ask. Because like we said, we're still playing, you're still putting up more every time you go to the table. Yeah, so I think Procter, you look at this here. Do I have the right thing? Yeah, I do. Okay, here. This gap here, what is this low here? 84, 86. The high was 81.34. It's Procter and Gamble. Come on. Things up from May. It's what was it, $70?
Yeah.
$70, 23. What's that? 31%, 32%? Come on, I gotta fade that. That's just fade means go against, Mike. I'm sure you know that, but for the millennials out there, I want to fade that. I have to fade that.
Millennials, huh?
I know you're not a millennial, but I'm sure there's plenty of them out there. I mean, I'm looking to fade that. I mean,
We
I want to
do.
fade.
We happen to have a few millennials that I know of that are active in the chat room.
Well, there you go. So that's for them. It's a glossary of terms. I used the term washed out this morning in XDM asked me, what does that mean? I said, that means, sellers are washed out. They're done. He goes, well, I understood it to be this, a different thing.
The opposite was Larry and I were just discussing about an hour ago about different Twitter hashtags, and we were saying, what the heck is this? What's this hashtag? What's that hashtag? The millennials will be laughing at us about that, not knowing those.
Oh, I don't know hashtags. I'm totally freaking inept. Totally inept. And I say that with a certain degree of pride. So anyway, I'm short Proctor. I mean, probably short 93.20 on average. And I bought some call spread this morning. I bought like the Jan. I bought the Jan 95 par call spread. I think I paid 15 cents because there's some skew in there, but there's some contango between Jan and April. No, sorry, Jan 95 April par call spread paid 15 cents. I get some short stocks, so I'll try to buy more of that if I get a sell off in a thing. Let's look at the Apple spread. I put that in the chat yesterday.
Yeah, let's take a look.
I bought a bunch of these freaking things. Well, I've gone from Apple Bear to Apple Bull. Look at that. It's amazing. You know what they say, Mike? If you don't like change, what was that expression? Some general said this. If you don't like change, embrace inactivity. Okay, Apple here. Same, different take on the same story. Look, I mean, 192 was a number for me. I mean, obviously with the understanding that it probably wouldn't stop exactly where I thought it would. But that notwithstanding, I think what we get as low as 186 yesterday, ballpark. Apple, I think it was 186.
Yeah, we got down. Might have even traded below 186. Yeah, no, it's funny. Larry had his stop at we traded down to 185.93. Larry's stop was 185.90. Lived. He survived and covered today at 189.
Rather be lucky than good. That's great. Then we'll obviously get $3 higher. Yeah. So Apple, boom, boom, boom. I think that let's see, 186, 222 earnings. What's that? 36, 18, 204. I didn't get the 204. Look, I'm doing this. I bought this spread. I bought one of next week's no pause and sold two of next week's 05s, 1 by 2, right? I think I'm in it for about 19 cents or something like that. Where is it now? 16. It's right about 14 cents right now. 13, 14 cents. Here, that spread there, you get 198 in this thing. I can't be more assertive in saying that there's a lot of randomness here. And who are you to say that Apple can't print 198 or 200 the next day or two? I have no idea. No one saw it going down to 186. Not when it was 220. Nothing but bulls out there. And I think they kind of washed out that sentiment. Yesterday or Monday was the big $9 down day. Yesterday kind of looked like they just got, yesterday looked like everybody got it at the same time. I mean, I don't know. I think I just want to take advantage of that volatility. I just want to take advantage of the change in sentiment, and I think the inflated volatility here. I mean, if you look here, Mike, look what this is. You can see what I'm doing here. Okay, this is 28 vol and pars. You see this?
Hmm.
Okay. See the 205s? Now, I know these are garbage options. I get it. I know they're garbage options, and that's 30. But, I mean, even a close, what you're doing is there's no skew here. The skew went the other way. It's got a smile. The volatility profile is more of a smile than a traditional equity flat line or high left, low right kind of deal. Now it's, the tails are all bit up. Like, where are we, 190? I mean, look at a 190 par. You're not paying anything. The 190 is at 28.7, pars at 28.3. That's flat line vol in this thing. The tails are bid up for obvious reasons. But you want to avail yourself of that. You want to shoot against that and spread against that. So I think Apple, what is it, a 21.20? Look, Apple volatility 2 weeks after August earnings was 17. Get your head around that. 17. Currently trading at 30-day stuff. I'm going to say 28, 29. So, I mean, It's very high right now. It's historically very high, and I think you want to use that to structure spreads or any type, or formulate some type of thesis where you can scrape out some money while making a directional bet. So I buy one, I sell two, 200, 205. If I get 198 in this thing, what do you think those 200s are going to be trading? What do you think is going to happen to volatility tomorrow? If, obviously, if being the middle word of life, Mike, we all know that. Apple trades 198 tomorrow, and there's 5 days to go.
Right.
Okay, well, let's say 4 days, right? We only have 4 days of trading. What do you think volatility is going to be? It's 29 right now, but now it's tick-tock, and all of a sudden, oh my God, we're not open on Thursday. Do you think vol is going to be 24?
Yeah, lower probably.
Probably lower. Okay. So I would think that spread would be worth at a 24. I'll keep it flat. $1.17, about 80 cents. I'm in the thing for 18 cents. These are the things you got to look at. Look at the whole freaking board. And I look, well, you know what? I'm only thinking 18 cents. I bought it in tranches, right? 27, 26, 19, 10, 6, like that. If the stock goes to 112, I don't care. I lost 17 cents. I'm concerned about the upside. That's where my pain is if the thing goes on a runaway. But I think I give myself enough room to protect against that. So I just look, if I can get to 198 tomorrow, Monday, it's a home run. And I don't think that's out of the realm of possibility. I don't think anything's out of the realm of possibility right now. So I think you want to avail yourself of that. I think you want to use these things to structure these things to try and leverage the volatility that's apparent right here. However you do it, time spreads, ratios, know where your exits are, and just go from there. I think there's money to be made. Look, if Apple goes, I'm just watching it. What's the high for the day? 91. This thing could trade. It could trade 198 tomorrow. So there's no rules anymore. I think it's just it's jump ball now, which is great.
Two things on Apple. It came out today. Apparently, David Tepper is out of his Apple stock.
Wow.
And that was one, and then two. This trade talk thing that has the equity markets moving higher. If there were some truth to if there is a deal between China and the U.S. over the coming days, Apple would benefit, being how much business they do out in China, how much production they have out there. So that would be something. But obviously, there's going to be tons of headlines over the coming days on leading up to this G20, and then even after the G20. We were talking before how Macron and Trump were holding hands, had each other's hand on each other's knee, and then
whoa.
It's true. It's there's pictures proving it. They were hand on knee, slapping hands, and everything seemed good.
About that.
And then on the plane right back, Trump sent some tweets, already going after him. So
it's amazing.
You gotta wait to see what actually happens.
I've never seen a guy who gets a lot of courage once he gets behind a telephone. It's incredible. He is the prototypical telephone tough guy. I knew a lot of these guys growing up, cursing at somebody into the phone, or giving you the finger from a moving car, which I always loved. I always appreciated that. It takes absolutely no skill. When we get out of the car, we can talk about it. That's what I've always looked at things. You're going to yell into a phone and tell me what you're going to do to me?
I'm sure you heard a lot of that as a floor trader, right?
You know what? I'll tell you.
A lot of guys yelling into phones.
A lot of guys yelling into phones. Toughest guy I know is my brother. He's first of all, he's insane, but he's strong and he can get to enrage relatively quickly. But I just saw him. I don't even know. We're in a bat. My other brother gets married. It's 1983, 84. My other brother got married. He got married young. He was 23. So my brother, we're at this bar, and this guy, we're all in tuxedos. This guy walks in a leather jacket. My youngest brother, embraces him. So I get like 5 Budweisers or something like that to pass out to these idiots. And I got one for leather jacket. And I go to hand leather jacket his beer where he was standing the last time I saw him. And leather jacket's not there anymore. Leather jacket's on the floor. Out. I said, what the hell? I said to my brother's friend, Frank, I said, what happened to, who is this guy? He goes, he said F you to your brother. I'm like, oh, okay. So it never got past the first F you. He never cursed anybody. He'll just hit first. And that's what I always admire. On the Amex, there were a lot of FUs flying around. No punches, just a lot of FUs. Larry can testify to that, right? Plenty of that stuff. Oh, F you, this, I'll do that. But never any punches. But my brother was just like, he just dropped somebody over, a guy saying it to him. But yeah, back there, Apple. I think this 1x2 is good. You got some good risk reward here. Upside room, if it's 15 cents right here, you got room up to 209. Was it 209.85 on the upside? A lot of room, and I did look. Facebook, didn't Amazon make that ridiculous move off that spike, off that for lack of a better word, puke low at 14.73 to 16.23, a full 10%. It went further than that, I know, but it got back 10% in a couple of days, right? So I mean, 10% on Apple put the thing at like 203, 204, right? 186 and 18, yeah. So be cognizant of that. I think in a lot of these things that are beaten up, I want to look up. I think in the PGs and the Johnny Johns, where money's kind of been hiding, I think you want to look lower. I think you want to be, structure things where you can make a move, make some money on the downside. In a way, it could kind of it would kind of be a long proxy, if you will, being short some of these things in here. Figuring that if money rotates out of that, the rest of the market would benefit.
Yeah.
But
So, question: what do you got on Packers Seahawks in Seattle? 4-4-1 Packers against the 4-5 Seahawks. Big Week 10 game.
Playoff game.
Actually,
playoff game.
Week 11 it might be. Yeah, Week 11. This is basically a playoff game here.
All right, I'll give you. Here's something that Trey Wingo and the boys won't tell you on ESPN. Rodgers is 1-9 straight up his last 10 road games.
Wow.
Do with that with what do, and he is trailed by more than 10 in 8 of those games. Okay? That's the truth.
Sounds like you're liking Russell Wilson tonight and his guys.
That's the truth. I mean, I'm just saying
Not only that, we've talked about this one as well. I mean, Packers have to travel to Seattle on the short week. The way team has not won any Thursday night games this year.
Very tough. I mean, road team, non-division. Okay, like you saw. I mean, last week was an extreme example. Road team in a non-divisional game. I think the home team is now 12-6, 13-6 against the number, and 13-6 straight up. Last 19. So that's about what's that? About 70%. So I mean, that's a real strong trend, right? I mean, interdivisional, it's a different story, right? Because I know what you do. So I don't have to kill myself with preparation in terms of I see it twice every year. I kind of know what you're going to do. But when you haven't seen a team, it's just that much difficult, that much more difficult. Now they got to go on the road to here. I mean, Seattle's been competitive the last 2 weeks. Took the Rams to the wire twice. I mean, I thought they were kind of outplayed by Chargers, who I think are a sleepy, maybe not that sleepy anymore. Sleepy, real good team, man.
I'm just scanning through. Monday night has unbelievable matchup. There hasn't been a good Monday night game in a while. This one is Chiefs at Rams.
Yeah, that's a good.
9-1 against 9-1.
I'm glad they moved out of Mexico City. I mean, I just didn't want to see it there. If for no other reason, I bet the Texans against the Raiders a couple of years ago, 2 years ago, a game in Mexico City, and somebody's shining a freaking laser into Brock Osweiler's eyes. I'm like, you can't have this crap. You just can't have it.
That was Brock Osweiler's excuse, right?
Well, the lasers, the land of lasers. My brother, I mean, nothing against Mexico, but I mean, when you're going to bring lasers to the stadium to shine them in a guy's eyes, I can't. I can't have that. You got to move the tour.
Yeah, apparently also the field conditions were pretty bad. So
that's what I heard. I mean, why it took that long is just about you're worried about player safety or you're not. And if the field conditions is such that player safety is a concern, I think you gotta look to move the game. I'll give you another tidbit. All right, Carolina Panthers. Go look this one up. Carolina Panthers. All right, the home team has won 14 of the last 15 games. The home team has won 14 of the last 15 games.
You're saying Carolina's not good on the road?
Well, I'm just telling you, the home team wins all their games.
I'm scanning right now. I think, are they on a bye?
They play at Detroit.
Oh yeah,
I think Patricia Ann Arbor.
Carolina's a 4-point favorite at Detroit.
Yeah, well, it said look. I mean, obviously this is a drop in class from what they faced on the road, certainly this year. But if you look at their games this year, I mean, I don't want to let facts get in the way of a great story, but they lose by 30 last week at Pittsburgh. At Philly, they pull that game out somehow. They're down 17-zip. At Washington, they're down 17-zip. At Atlanta, they trailed by 14. At the Saints in a wild card game, down by 15 last year. They fall behind. I do a thing called game strips where I look at, I try to look at what a team leads by or trails by for at any point in time during a game. So, I mean, the disparity between their home and away is just absolutely remarkable. And it's up here. It's here right now. Look at this here. Carolina.
I gotta get back to that. Hang on.
You see this here? I got now their game script.
Whoa! What is this sheet you've been hiding from us? What is this?
That's proprietary.
We need to have a Friday talk with Tom McEntee on this spreadsheet.
That's proprietary stuff. Here, their game script at home is 7.5, which is extraordinary. Which means that at any given point during any home game, they have a 7.5 point lead. Okay, which is outstanding. Now look at their game script away. Negative 6.7. Okay, now granted, they've played strong teams away, where their profile on the road would be a negative 6.7 against a team with a power rating of 5. They'd be about a 12 on the road. Home, they're playing a team. They play teams with a 10.5 power rating, and they're a 7.5. So they're like a 3, which is really good at home. They're a 12 away. The disparity between their home and away is remarkable. This year, they're outscored by 10 points a game on the road. 10 points per game on the road.
I got to ask for more info on this. You put this together yourself? Is this something you buy? Is this
No, I put it myself. I just
What are you gathering here? What's in columns like A through I see A is the team. What's in column B through,
Oh yeah. This is just here. This is the season points, 4 points against average. Okay. So that's Chicago, 30-19,
right.
yards 120 versus 84. This is how they do at home. This is how they did the last 3. Green means good. This is how they do away. These are their sacks. They have 30 sacks. The opponent has 18. That's their turnover ratio, plus 13. You see that? I mean, that's kind of telling. That plus 13 giveaway, takeaway. Now here, to me, this is a very critical statistic. Yards per pass differential, 1.3. So they may average 7.3 yards per pass.
Selling this information to our buddy RJ Bell out in Vegas.
Now, he probably has it or some derivation of it. But the game script is where I do a lot of work trying to crunch numbers to come to a number where I think it's fair. Like I think I'm looking at. I think Chicago's been playing well, but I think they benefit from a lot of takeaways. I think a team like Minnesota, I think a strong team is getting healthier now with Dalvin Cook out there. Chicago has played a lot of Darnold, Josh Rosen. They played a lot of
bad quarterbacks, young quarterbacks.
Right? They played Josh Rosen. They played, I think,
so
Jameis.
Looking at your screen here, who's undervalued, who's overvalued?
I'll tell you tomorrow because I haven't done any numbers yet. I haven't done my numbers yet. I mean, my stuff is probably like a lot of everybody else's. I have my 2 top teams are Kansas City and the Rams. I have them about a dead heat.
That's what I'm saying. That's Monday night.
I would say New Orleans maybe a half a click off of that. I think Pittsburgh maybe a half a click behind them, and then I put San Diego. Yeah, by Pittsburgh a 5, San Diego a 6. I think San Diego is a sleepy, strong team that I think people are forgetting about. And
this is finally Phillip Rivers' year.
Well, you know what? Look, I will say I think they may have the best receiving core in football. I think when you put Keenan Allen out there with Mike Williams and Terrell Williams, both long, fast guys who can get the 50-50 ball, Keenan Allen, the prototypical possession guy, and then Travis Benjamin, another speed guy outside. I mean, they're missing the tight end all year. And now Gordon's got to be a top 5 back, right? They haven't been. Look, I mean, this team, they turned the page when Corey Liuget came back to play right defensive end. Most people don't know who that is, but he's a good player. Been about around 7 or 8 years. He played right defensive end, number 94. Next time you see a Charger game, watch this kid. He can play. Good push, stout against the run. He came. The defense shored up. Now they get Joey Bosa back. I think Bosa's practicing. So I think when they get Bosa back, it could be an interesting thing. Look,
Tom McEntee's a numbers man.
They're 16-4 their last 20. On a bet, you wouldn't know that. They're 16-4 their last 20. Their losses are 2 to the Chiefs, 1 to the Patriots, and 1's to the Jags.
Did you just say also before that Aaron Rodgers' last 10 away games, he's 1-9?
Correcto, 1-9. Yes.
There you go. Tom McEntee. Tons of amazing stats, both on the markets and in the NFL.
So we got Nvidia, we got
Got
Apple, and
Nvidia.
I'll get
And then,
something to name that for
you
you.
know, and we're not endorsing anything in the NFL, but I mean, 1 in 9, Aaron Rodgers on a short week heading to Seattle. I don't know.
Those are just like Dennis Hopper said in True Romance. Like Dennis Hopper said to Christopher Walken in True Romance. If that's a fact, tell me, am I lying?
All
One of the
right.
great scenes of all time.
Yeah. All right. Well, hey, thank you very much, Tom McEntee. A lot of great information. Great talk as always. We'll be back to you. We'll talk to you on Tuesday. Have a good weekend,
Mike,
NFL weekend.
it's snowing here, Mike.
No way.
Tell Larry it's snowing. It's snowing. It's snowing in my neck of the woods,
Oh
which was
my
his neck of the
gosh.
woods at one point.
Yeah, I'll tell him. All
Hey,
right.
have a great
Talk to you later.
weekend if we don't talk. Take care, buddy.